Guys, so in this video, I'll be going over where can we find potential A plus setups. When is it the best time to be trading? When is it considered high probability conditions? So before we get into all of that, we need to understand the type of markets there are in this industry. We need to understand the type of markets. So there are three stages in the markets. There is the expansion stage, there is the retracement stage, and there is the consolidation stage. First off, in the consolidation stage, we need to understand that it is a very low probability condition that if you try to trade in consolidation, it will not end up to your favor. That most of the times you will get stopped out, you will hit break even. It's very tricky to be trading during tricky to be trading during consolidation, and I will show an example of this after. And don't worry guys, if you guys don't know any of these, and don't worry if you don't understand any of these terms here. I will go over them on the charts in a few minutes. So during consolidation, we do not trade, we should not trade. A lot of amateur traders, they try trading because they're impatient, but most of the professional traders, most of the professional traders that trade with the trend don't usually trade when price is consolidating. So now expansion. The expansion stage is actually where we can find the best trade setups. It's actually where most of my trades are taken. A plus setups are found. During the expansion stage is where we, for example, if we are bullish, we continue the trend, we continue buying at institutional support areas, whether it's an order block, a breaker block, a liquidity grab, a fair value gap, all of these confluences. It's during the expansion that we buy if we're bullish or we sell if we're bearish. And now for the retracements. Usually it's best to wait. It's best to wait for price to retrace. However, most of the times, however, some traders, they like to trade the retracements back to the, some traders, they do like to trade the retracements back. However, some traders, they do like to trade the retracement when they see that price is retracing. And for example, if we are in a bearish trend and they predict that we are in a retracement right now, they'll buy to a retracement level. However, I do not recommend that. These are much riskier trades. Do not recommend. So just to conclude, so essentially where I place most of my trades are during the expansion stage, during this stage. The other stage, retracements, I watch. Consolidation, I do not even look at the charts. I don't care what price is doing when price is consolidating. So let's look at some examples. Let's look at some live examples. Alright guys, so let me just show you a visual diagram of what exactly am I talking about when it comes to expansion, retracement, and consolidation. So in an ideal world, how it works is price expands. So say for example, we are bullish on the higher time frame. What we see is an expansion to the upside. Price comes down, retraces so that it could further push on to the upside. Price doesn't just go up without retracing. It has to retrace in order to continue going to the upside. So price expands, retrace, breaks these highs, confirm that we are bullish, retraces, expands, retraces, and that's a bullish market structure. That's how price usually moves in a bullish trend, in a bullish market. However, there are times when we can see price maybe comes to a point where there isn't much price movement, meaning price is not going to the upside as much, price is not going to the downside as much. We're literally just stuck within this area. Now, this could be due to maybe upcoming news, price is getting ready for an upcoming news, or this could be due to maybe holidays. During the holidays, banks are not trading, so there isn't much volume in the markets at that time. And now let me show you guys an example of each type of market and what I would do in each type of market. This is what I mean by consolidation. Consolidation is basically when price is in I guess you can just put a box and price is just going up and down within that box or within that range. It's when markets are like this when I avoid trading. So just to show you guys another example, DXY has shown a great example of consolidation. As we can see here, we place a box, price is literally just going up and down. It's very hard to find setups within the boxes or within the consolidations. Same example on EU. Finding trade setups within this consolidation will be very hard, risky, and not the best conditions to be trading. As you can see here, this is from the beginning of December all the way till January. One whole month of consolidation. A professional trader will understand that, okay, I shouldn't be trading this month. Okay, I shouldn't be trading when price action is just consolidating. Let me take a break. Let me wait for price to become better. Let me wait for that expansion or that retracement. A quote that I always repeat to myself that a great trader has said is that it's very easy to find A+ setups, but it's very hard to not do anything stupid in between. And this is exactly what you should not be doing in between. You should not be trading when the market is like this. Instead, what we want to do is we want to preserve our capital for when price is in better market conditions, when we are expanding, retracing. You can see we were consolidating and then we finally broke out of the consolidation. We came and took out these lows. We grabbed the liquidity. This is a liquidity grab setup. We see that price grabbed the lows, came to the upside. We expanded. Now, what I'm waiting for is a retracement. In the retracement stage, trying to sell to a retracement level is very risky. As you can see here, I am not taking this sell, but I am going to be watching it, and I am expecting for price to at least respect this area and come to the downside. I do not trade in the retracement stage until we reach our retracement level. With this higher time frame institutional support, we will see that price will come here and we will see price to start expanding. If we respect this institutional support area, if we see price respecting off this area, for example, if price is rejecting off this area and we see an expansion here, we are expecting an expansion. So what we are doing is we are finding the best setups to be buying here. This is where the best setups are formed during the expansion stage, when we are following the trend on the up, when we are following the trend. Now, I will go into detail on how to find the buys, how to find setups within the expansion stage. But this is exactly when we would be trading best high probability conditions. During the retracement. We'll see medium probability conditions. Meaning it's very risky. It's a must. The trade ideas are much riskier. If you're trying to sell to the retracement levels, you're trading against the trend. You're taking much riskier trade setups. And then this is the consolidation. Low probability conditions. I like to stick with only trading A+ setups. I like to stick with I like to stick in the expansion stage. This is where I make the most amount of money. This is where I pass my challenges. So let's look at more examples on that expansion stage where we can find buy setups if we're bullish or sell setups if we're bearish. So alright, so going back to the USD CHF example, as we can see here, we do have this consolidation. We do see prices in the range. At this time, this is where we shouldn't be trading. We should just wait for price to break out of the range. And we've seen that right here. We've seen that price came, took out these highs. We had a liquidity grab. Price came for these highs, took out the highs, expand to the downside, following the higher time frame trend, which we are bearish. And at that point, when we expanded, now this is the retracement stage. We retrace back to this 1 hour bearish order block, and we filled in the fair value gap. We came to this area right here, this 1 hour breaker block. On the 4 hour, it's a 4 hour breaker block as well, and a liquidity grab, and we're bearish on the higher time frame. So price came back to our retracement level, 0.79 area. It respected off this 1 hour order block as well. Now we know that after retracement, what happens? The expansion happens, and at the expansions where we make our money. So this is the retracement, and this is the expansion to the downside, following the higher time frame following the higher time frame trend. So it's at this area where we look for, is where we place trades. So let's look for some trade ideas. Well, first off, we could have definitely entered off this 1 hour breaker block itself, placing the stop loss above the 1 hour order block for 1 to 2. That's one trade idea we had. Then we keep continuing the trend. We keep continuing the expansion. So on the 15 minute, what do we have? We have this 15 minute breaker block within. As we can see, price broke these highs, create a breaker block, continue to the downside. Then we keep continuing. Price respected off this area, so price has to continue expanding. We can see that price has been respecting off these areas. On the 15 minute, for example, we had this breaker block in here. Price came. Price created a breaker block, respected off that area, and eventually did come back again to that area to the downside. And then we just keep looking for sell setups. Continue, but make sure that we are also buying and selling during kill zone time. So as we can see here, this is 3:45 a.m. right around London open. So usually on London session, what we have is high of the day, right? So we have a London session high of the day, a bearish breaker block in the expansion following the bearish trend. This will be another great trade setup to be taken. And then we continue down. So during what? Then during New York session, we had an OTE retracement back to this 15 minute order block. We had an OTE retracement, continue selling. And then we keep looking for sell ideas. We have this 15 minute breaker block. Is this during London session? Again, London open, a clean London open, high of the day, back to a breaker block. We sell at this area. We continue to sell at the 15 minute breaker block. And this is where I mean by the expansion. We just keep looking for sell setups. That's why during the expansion stage, there are so many trade setups. That's why there are certain times when I have so many trade setups, when I have 5 to 7 trade setups in a week. And sometimes when I barely have any trade setups because the market conditions could be consolidating at that time, or maybe I'm waiting for a retracement. But during the expansion stage is where we make the most amount of money. We just keep continuing to the downside until we can use our intuition where we think that price has created the low, where price has expanded enough, or price has taken out the lows, taken out the sell side liquidity. We could target the sell side liquidity at the bottom. And then we start coming up with the idea that, okay, maybe we are done with the expansion. Maybe we are waiting for a retracement. So going back, one way to determine if we're done with the expansion is if price took out the low, price took out the sell side liquidity. And another way is if price does not respect the bearish institutional resistance anymore. Price came down, came to this 15-minute order block, still respected. But at this point, we can see that we are now no longer respecting this 15-minute order block, that if we just start seeing price come and take out these highs, then we are back to the retracement stage. So as you can see through this video, during the expansion stage is where we make the most amount of money, where the best setups are formed, where we can find A+ trade setups. And also this answers a question which I get asked all the time. Oh, how come you didn't place this many trades this week? Oh, how come you placed a lot of trades this week? It all depends on the market condition, guys. There's this fallacy where you need to trade every week, where you need to trade every day. But I'm telling you guys, the people who I studied, the 7-figure traders who I've studied, they do not trade every day. They don't even trade every week sometimes. What they do is they wait for the market conditions to be perfect. They wait for high probability conditions, great market conditions to trade again. If they see that price is consolidating or if price is in low probability conditions, they wouldn't trade. And here's an example. This is the journal of a 7-figure trader named Umar Ashraf, who's been trading for, I believe, a decade now. And he made $1.4 million in 2022. And as you can see here, there are months where he made astronomical gains and months where he just broke even or wasn't negative. So you need to understand, guys, not every day is a trading day. Not every week is a trading week. And sometimes there is even months when one should not even be trading. As you can see, this journal, you can see that there are some weeks where he didn't even place a single trade. This entire month, he didn't place a trade at all. And this could be due to bad market conditions and just him preserving his capital for when market conditions are much better. a lot of you guys will lose a big chunk of your capital or even all of it in low probability conditions. And then when great market conditions come, you guys have no capital to trade with. So you need to understand, guys, that there are seasons in this game, that not every month is the same, not every week is the same. The conditions are always changing, whether from a low probability condition to a high probability condition, and we need to take advantage of when it is a high probability condition. I'll have another video on this, probably the next video attached to this. This will just be a part 1. Part 2 will go over more trade setups on that expansion stage. But thank you guys for watching this video, and I'll catch you guys in the next.